Hi, everyone. Does anyone know when the webinar is going to start? Can anyone tell me when we're going to start here? Look at Sandrine, he knows everything. Yes, we record them all. Nice to meet you. So, should we start a webinar?
Why not, Coach? What are we waiting for?
Really? You want to have one, Steve? I'll do it for you. Okay, so I want to
Thank you, you're very kind.
Let's start. Okay. High Faces. You know, it was a great band, Face. It had Rod Stewart in it. Okay, David. So let's talk about some of the transitional things that could happen before it turned in the market. And I just want to point out one thing. So here we have the S&P 1 hour chart here. Okay, so see this high on the 14th? You know, then we stalled a little bit, right? Look at the NASDAQ, see this high on the 14th? S&Ps after the 14th made a new high here. Lower high in NASDAQ. S&Ps after a little consolidation, a little pullback it had yesterday right here, has made a new high by quite a bit. NASDAQ, this high still has not taken out this high of 9102.30. So the leadership in the market has been tech, semis, Apple. Okay, yeah, take a bite out of the apple. And yet the leader of this whole advance is starting to lag the broader market, the S&Ps. So I'm not saying that as a sell signal, right? It's a market tell though. Okay, you get messages from the markets when you compare sectors or certain correlations, and the message to me is momentum is beginning to wane, not just with RSI, not confirming. I mean, here's the S&P, and right. So here's your 1 hour chart. Here was your confirmed high on the 14th, and yet we've made a couple new highs without momentum making a new high. Okay. And that's what I wanted to say about stock indexes. Okay, you know, one thing that doesn't mesh, and I've been talking about TLT. Looks like yields are a little lower now too, but this is an ETF of 20-year treasuries, TLT. And we're really on the verge of a breakout out of this symmetrical triangle. I would normally interpret this, if we get this wave, that there's going to be, you know, people are buying bonds out of, hunger for yields. I guess, you know, you could say that's it. But I also believe that people buy bonds to avoid risk. They think it's will protect them in a risk-off environment. And this is on the verge of a breakout that I think you could see new highs. It still needs to break out, but you can say that it's definitely knocking at the door. Similar when you look at yields. Okay, here, this is going to be a breakdown in 10 years. Right here, 73 or so. And the 30, the last week or so, looks like it's doing it. Okay, so lower yields. So what doesn't make sense with lower yields? Strong yen. We've got a breakout. If you bought this breakout at 70, and this is a daily chart, I'm not the most patient trader. In fact, I'm out of my long euro. Probably shouldn't have done it because I've just, you know, wasn't really, you know, 40, 50 pips, 3-4 days holding it, taking risk. I mean, winning trade, and I should still be long. It hasn't done anything wrong yet, but I struggle with the same things that most traders struggle with, and, you know, even the pros do, and patience is the biggest thing. And one way to correct that is not to be attached to your workstation all the time or monitor something from a longer TF. Okay, so sometimes I'm better off not watching it because it's hard to watch a market and not feel attached to a position. Sometimes the best thing you could do is set and forget and let the market do the work. You're not going to change your destiny by staring at the screen, although, you know, you guys know I joke about the cursor method, etc. And sometimes, not sometimes, for me, always being too close to the market and watching it all day long is, first of all, you know, life is happening while I'm staring at candles. I'd rather be out lighting up a candle, okay, instead of staring at candles. So something to take into consideration. I'm looking at this oil down here, and you know, I'm pretty bearish. We're back under the throwover line, but short term, I wouldn't be pressing it because we're starting to diverge here. If the S&Ps continue, I would like to see some type of sympathy rally in the crude oil market. Maybe back to at least 60. I would do some type of fib retracement. Maybe we could even get to 62. I'd like to see that. And we'll see what happens with the gold here. You know, we're right at some major resistance here. To me, I thought this pattern was incomplete. And in fact, while I'm talking about gold, we have a great guest today with us. So everyone stick around for James. Okay. He's with SD Bullion. Okay. He's been in physical, and it's going to be interesting since gold is not a one-way street right now to hear his views. So if you're a precious metal advocate, and getting back to this, so because I think yields are going lower, I'm looking for, I really don't have to do anything here, Raj, until we close back under 109.70, giving me a false breakout. But my bias is to look for a short. I did it earlier in the week. I covered it. Wouldn't mind seeing a new high. I don't think that will confirm. Here's a real short-term time frame. So we did here, and on the 1 hour, we did here. So I would actually like to see a move between 1020, 1040 and attempt shorts. And most of it is based upon my view of what's happening with yields. Okay, everyone cool? Any questions before I pass it on to Blake? Okay, I want to thank everyone for hanging out with us today. Let's have a great day. Thank you, Brock. Hi, Blake. Good morning to you, buddy.
What a historic signing yesterday.
Yeah.
It was historic. It was long. Holy cow.
Yeah. It's pretty amazing to, you know, to witness a couple in our lifetime, Blake, that, you know, I don't think there are any U.S. citizens throughout the history of our country that have seen two in their lifetime, both very different, but two impeachments.
Oh, well.
Yeah, Clinton, you know, that was, you know.
I was talking about the trade deal signing.
Oh, my goodness. See where our heads are at? Okay.
That was historic.
So was the other signing.
I guess
signing the articles.
Yeah, he'll be acquitted. It's, you know, whatever.
I know.
Yeah.
Well, who knows? You know what, Blake? Everyone's saying that, and you know me. When everyone thinks something is a layup, I'm always looking for someone to come in and block the shot. So
yeah, but in this case, politics, it is a layup.
Is it a layup? Okay.
Yeah. I mean, I hear you. I hear you barking, but
yeah.
But anyway.
Yeah. Well. We'll see if you know, there is a powerful thing. I do believe that most people that go into public service as a senator or congressman, at least at the beginning, have the ideal of service, just like you did when you went into the Marines. They may have become jaded and enriched themselves, but there's a powerful thing in human beings. It's called a conscience. So we'll see.
Yeah. Well, yeah. Yeah.
Okay,
we'll
I'm
see.
through with my homily.
Okay. All right.
Let's make
So
money.
let's talk a little bit about the price
Making
action
money.
or the lack of price action yesterday.
Yeah.
You know, it's interesting. Paul Franco, who does the European crossover, and if you guys don't listen to that, you know, it's a couple hours earlier than this webinar. He had a really good comment yesterday, which he says there was, you know, so much buildup going into the signing. He's like, I think it's going to be quiet for a couple of days before we see a reaction, which you know, is exactly what we're seeing as of right now, is just a very quiet lack of reaction to the historic signing of this trade, you know, trade deal, the phase one trade deal. And you know, the market just really went, nah, you know, and just it just continued on. We are continuing to see the euro dollar move higher. Now, there was some bullish comments coming out of the ECB minutes today, and as you guys know, I'm a euro bull. I've been a buyer on dips. I think we're still going to rally towards 112 and maybe even higher. You know, I think a real shift in the ECB is what could, you know, really turn the euro higher over time. You know, everybody's expecting Lagarde to be rather dovish, but you know, I don't know if she's really going to be. I think she's going to be, you know, shifting a little bit more hawkish moving forward, and the minutes were reading as such. And the euro is starting to get a lift, but you know, until we get, you know, an ECB meeting and we get some, you know, concrete evidence from Lagarde, you know, this is just trying to build, you know, a continued build a base in the euro dollar. We are above the 50% retracement. I think 111.80 to 112 is a relatively good near-term target for bulls. I think once we get up there, it's going to be a little bit more challenging for the euro to make any headways unless there's some significant news or maybe a significant move that's happening elsewhere. But the euro is you know, it held the dip to the breakout point to the 38% retracement and bounced. Like I said, I was expecting a little bit further of a dip. I was hoping to buy some down in the 20s. That didn't happen, and the euro is just, you know, continuing to hold on to its gains. Now, it's not just the euro. The cable's up as well. The cable's actually at triangle resistance and trying to break higher right now. So just, you know, just realize the cable may have some upside here. I think we could really extend towards 131.50, 132 in the cable moving forward. And again, I think it's more broad-based dollar weakness versus cable strength per se, but the pound looks pretty strong. The Aussie, if you listen to yesterday's daily roundup webinar, I mentioned this, and I want to talk a little bit about this. And if you remember, there's a bunch of you guys that were tuned in yesterday because it was in between the trade. You know, it was while Trump was talking about you know, trade and the trade agreement, the phase one deal, and I said, you know, watch this Aussie. If it spikes above the 38% retracement, which is 69.18, which we are, we might, you know, challenge this really big, and I think it's a big pivot on the Aussie. You know, here you can see it right through here, right around this, you know, 69.30, right where we're at right now. I think that resistance might be a little bit of a, you know, a struggling point for the Aussie. What I would be looking for, and I said this yesterday about 15 hours ago. I said, I don't know if I'd necessarily short the Aussie dollar, but you might look to short an Aussie cross, because I'm not too hip right now on trying to play dollar strength. I'd rather not try to buy dollars, but to play the Aussie on the short side would be, you know, long the euro Aussie, long the pound Aussie, something like that. And especially if we come back and fall back below the 69.18 level. So I'll be watching the Aussie pretty closely today, because like I said, I think this is a very tough area for the Aussie dollar to get past, and we might really struggle up at these levels. You know, between here and maybe 69.40, we might get a little bit more of a lift. Like I said, right now we're seeing more broad-based dollar weakness rather than Aussie weakness per se. You know, let's take a look at the yen. You know, the yen, you guys got to take note of this. And I'm going to reiterate, the S&P is at highs. We are almost at that big confluence, which, you know, 33.15, been waiting for it, waiting, still waiting. The S&P is almost at that 33.15 level. We're about 10 points away from there, roughly 10, 12 points away from there. The US dollar Japanese yen cannot even get above the 110 level. Okay. So, you know, if, hold on really quick. So the S&P is, you know, just right up against this resistance, and the dollar yen again is struggling. I actually sold some dollar yen as a result of that when I got up this morning at 109.99. So there was a question about, am I short the S&P? I am actually short the S&P here. I am starting. It's just a small position, and believe it or not, it's only been a day, because I said yesterday, once this deal gets signed, I'm going to start legging in. And I took a little position yesterday, and I feel like adding a little bit more if we can get up to that 33.15 level. So have I been standing on the sidelines this whole time? Yep. Have I been waiting for this phase one trade deal to get signed since, like, I don't know, 6, 8, 10 months ago? How long ago did I say that?
Feels like 10 years.
It feels like 10 years.
Yeah.
So
it
was
about 4 or 5 months ago, Blake. You were waiting. Said we're going to have a blow off into it, and we haven't exactly gotten the price action with, like, you know, a day with the S&P's up 30, down 30, but we're in, you know, same things happening, only in pieces.
Yeah, you know, I was hoping we get some sort of blow off top, but this is, you know, we're just kind of grinding up here. That's one of the reasons why I didn't just get into a full position short S&P, because it's like, you know, I would have rather seen a 5% spike higher and lower, you know, yesterday. That didn't happen. So, you know, now that we're close to this resistance that I want to be, and the phase one trade deal got signed, I legged into a little bit. I have a lot more to add too, but it's, you know, it's more
Blake, for I'm sorry, just for smaller traders, you know, that micro S&P contract, I think, is very viable and taking off for our clients that trade our patterns and play, that they could reduce leverage and go not to just a mini S&P, but a micro now.
There's different ways you can trade it. I guess there's the S&P micro contracts. You can do, you know, you can trade, you know, S&P.
I don't know, what's one handle worth, $5 or something like that?
Oh, okay. Well, I didn't even know that. Then you have you know, regular S&P futures, which I'm trading, or you can you know, trade if you're European, you know, or Asian, you might have like an ETN that you can trade. Different brokers offer some sort of equivalent, but the fact of the matter is I'm just legging in here, and you know, I would love to get more aggressive, but you're exactly right, Dale. I didn't see the price action I really wanted to going into this. You know, it's not exactly the way I pictured it. However, that doesn't mean that it's not
viable.
It's not, yeah, we're not at, you know, what I consider, you know, very key resistance around here, that I think we're going to get a reaction, whether it's today or, you know, the next couple of days. I think this is a level where we will see some sort of reaction from the market. And so that's why I'm really, you know, wanting to take a little bit of a position here. So, you know, can we reach a little higher? Yeah, quite possibly today. You know, we can reach a little bit higher than where we're at right now. I think is possible. Like I said, the dollar yen, though, this is the one that really is sticking out like a sore thumb to me. I I entered a little bit of short dollar yen, just because we're up here and like I said, it's not following through with equities. I don't want to get aggressive unless we get back below like 109.60, and then I could, consider adding to that position. But right now, it's kind of like my S&P. It's like a filler or a feeler position. It's like, all right, I've got a little bit of skin in the game, and this way I can watch it a little bit more closely than I was watching it before. And I do that a lot with my positions. I'll sit here and I'll put in a starter position. This way, it just keeps my attention and makes me focus on it a little bit. By the end of the day, if the dollar yen doesn't drop below 109.70, I might just pull it off and put it on again tomorrow, that type of thing. And as long as we're below this daily trend line, below the like 110.25 level, I don't mind being on the short side at this point. The dollar index is very it's very weak. I blogged about this the other day. We have a death cross in the dollar, and it's starting to build momentum as the 50-day is starting to peel away from the 200-day moving average. And that's something that, for those of us that trade the euro or the cable or the Aussie or the Kiwi, we've got to pay attention to that, because we are seeing this death cross, which I know I talked about this in the blog, but I'll just show you. Even the last one not the last one, but the one previous in 2016. When we got the death cross, if you just think about what the move was, the next, let's just say, you really identified it somewhere down here. It still made a 2-3% move lower before it bounced. Obviously, the next move was like a 10% move. It was a lot bigger, but it's something that I think you should note, because the dollar index has been, well, you'd say it this way: the euro has been basing, and I know we've been talking a lot about it at the 111 level. It's just been kind of basing around here, 110, 111. And the longer it does not go down and does not go to parity, which, so many people feel that the euro should be trading at parity, the longer it does not go down there, the more risk we are of a snapback, recovery. Is the euro going to 120 or 125? I don't think so. But, can it rally to 115, or maybe even slightly higher than that? Sure. I don't see the reason why it cannot. So, especially if the ECB starts to shift its rhetoric a little bit, as we got in the ECB meeting minutes today. So, those are just things that I'm again, things I'm just paying attention to. Oh, one other thing: euro yen, it completed its double bottom today. You guys should note that. We had a double bottom, neckline here, completion here. We completed it. Does that mean I'm going to short the euro yen? No, but if you're long, you should probably be a little careful, because we've been getting these false breakouts every day. If you look at the daily candles, we've been pushing above, like at this time of the day, and then we close below. Push above, well, yesterday we closed right at it. Today we're obviously in a new trend highs. Will we close back below? I don't know, but it is something that I think we should be paying attention to, because it has completed its pattern. It was a double top ish, didn't break all the way down, didn't complete, and now it completed a double bottom. So now you got to be a little bit more wary of being on the long side of euro yen, which also would be, you got to be a little wary about being on the long side of risk appetite, especially with the S&P at 3,300 this morning. So we've got a surprise for you today. So instead of introducing my colleague Steven Stelios, we have Gregor Horvat's going to be joining us today, which you guys are in for a really big treat. So I think we have to go over to let me see, Greg. I don't see him in here. I think he's going to be popping in here in just a couple of minutes. which will be great. Can you look for them, Dale, on the attendees?
I will do so now, don't worry.
Oh, okay. Thanks, Steve. Appreciate that. So we're going to have Gregor Horvat jump in and give you guys a little bit of an update on, an update on harmonics, which is great.
I don't see him in there.
Yeah, he's
He's
coming on here in a few minutes.
Okay. I'll keep an eye out for him. I'll be the bouncer.
Okay, so and by the way, we do have retail sales coming up here in a few moments. So just really quick, dollar yen. I don't think this is going to be a huge mover for retail sales. However, I think the risk it would be, if we start to see the consumer showing a little bit of signs of weakness, I think that's one thing that could possibly weigh on the market a little bit. So just keep that in mind. And today for retail sales, let me pull that over really quick with Bloomberg. We are looking for, here, let me expand this out just a hair.
Use those credit cards, consumer.
Yeah, month over month, see, we're expecting 0.3 versus 0.2 previous surveys, 0.3% month over month, and minus autos and gas. We're expecting pretty big increase for retail sales. Those are expectations due to holiday spending. So we'll see how strong this holiday season was today. So that'll be, like I said, I think people will be focused a little bit there with today's data release. So did Gregor Horvat jump in?
When is that release?
Not yet. He's coming on.
Oh, okay. So let me just make sure. Oh, you're looking for him. Okay.
Yeah,
all right.
yeah.
So how you doing today, Steve?
I'm good, mate. How have you been?
I am awake, and after yesterday, I'm just kind of like whatever. I'm just shrugging my shoulders and hoping the market brings us some volatility. And like I said, I think yesterday Paul made a great observation that everybody was expecting big fireworks in the markets. That is, following the trade deal signing, we didn't get it. It is a snoozer, and it continues to be a snoozer. We might need a couple of days of consuming all the data before the market really reacts to what's happened with the U.S.-China trade deal. I don't really see anything to stand out, but I do want to reiterate something that I said yesterday. Trade is not a zero-sum game. When you take from one economy and give to another, you will, it will make another economy or country suffer. So that's something to think about as the U.S. pulls some of the Chinese buying back towards the U.S. Where does that actually pull from, and how does that affect, whether it's Australia, whether it's Europe, whether it's New Zealand, whether it's the UK? Those are things that you should.
In this case, it'll be South America because it's mainly beans and agricultural products.
Well, and it could be South America. It definitely, Brazil,
Yeah.
Africa. But you look at like Australia, and Australia, the currency has not really responded. I know it's up today, but I look at the Australian dollar and I'm like, I think Australia is going to be one, and I said this yesterday, is going to be a country that ends up suffering a little bit more than you'd think. And people probably are buying Aussie on the what's good for China is good for Australia type of situation. But I actually think that tide might turn a little bit. So the retail sales data will be out here in just 1 second here. I'll just pull it up.
Will you cover them, Blake, or you want me to do so?
No, I'll do it because I know you're looking for Grega here. So
Takes a while for him to get from Slovenia.
Greg
watch,
is here, by the way.
see where my highlight is right here. This is what numbers you should be watching. Also, you Philly Fed. You can pay attention to that number too. Here we go. Sorry, I didn't pull up Data Flash, but you have Data Flash if you're using ForexAnalytix. it's almost as fast as having Bloomberg. And that's included with your ForexAnalytix subscription, by the way. I just happen to have Bloomberg. So I just keep it on
There you go.
Retail sales actually pretty strong readings. They came in line. The minus autos came in pretty strong. So it's some good numbers, and you can see that the dollar is responding as a result.
Yeah, jobless claims also came a little bit better.
Yeah, Philly Fed hasn't come in yet.
Yeah, it hasn't.
And initial jobless claims continue to be pretty good. But, you know, the dollar yen.
For some reason, we did get the revision, though, of the previous reading for Philly Fed, and it was a big revision higher, revised from 0.3 to 2.4.
Well, I don't see that on Bloomberg yet. So, and then
it has it on Data Flash.
So if you look at Data Flash here, whoops. So you got the revision in the Philly Fed. That's pretty big. So we're still waiting for the actual number here. And this Data Flash, remember, this is included with your ForexAnalytix subscription, which is a really big benefit for you guys. You know, especially if you're following these news events as they are released. So it looks like Greg is here. I'm going to pass it over to you guys. So have a great day. Remember, guys, take advantage of the New Year offer that we have out. It only comes around once a year, so take advantage of it. And I'm going to pass it over to you.
Thanks, Blaker.
Thanks, guys.
Hey, hi, Steve.
Are you ready? Hey, Dale, how have you been?
Good. I want to tip my hat to the patriotic Americans that consume.
Hey, guys.
Hey, Grega.
Grega, hey, buddy.
You want to grab the screen, Grega?
Yeah, of course.
Okay, go ahead.
Everybody, the Wizard of Waves,
How are you,
Grega
Dale?
Horvat.
Dale, are you good?
Yeah, good, mate. How have you been?
Happy New Year,
we
Grega.
just got Philly Fed, by the way, 17 versus 3.8 expected. So a very strong number.
I'm going to go open some Philadelphia cream cheese and put it on my bagel. All right.
We still don't see your screen, Grega.
Are you sure?
I don't, at least.
Yeah, here
now
it comes.
I do. Now I do.
Wait, just
Got it.
Okay, now we can see you. You're showing us crude, right?
Yes, I will start with crude oil.
Great.
Okay, so I think that I will start with crude oil because I think there's some interesting relationship with the S&P 500. I posted this chart on Twitter yesterday as well. So before I go into details, I want to just give you the fresh outlook about the view here on crude oil. So I still think that prices can be headed to the downside. I think that we are just consolidating here since market actually broke lower in 2018, and through later that year we then have seen a recovery and into 2019, and this recovery could actually still take some time before the correction is fully completed. What I'm looking at is actually two wave counts. Okay, now the first wave count, because I'm tracking wave B, and looks like that is going to be a complex correction. The first and primary wave count is still a triangle, so I need 5 subwaves to count 5 subwaves moving to the right before I may expect a breakdown. And what is the most interesting part here is that even with the current sideways price action, we still may see more weakness towards the lower trend line here connected from 2018 lows. And the reason why I'm thinking about more weakness is also because we need 3 legs within current wave D.
Yeah.
Okay.
The nature of this first leg lower was pretty impulsive. I mean, that was a big reversal.
That's the main story why I think that more weakness could be seen. And even with this bullish interpretation, which is my second wave count, by the way, it suggests that we may even retest this 67 area, maybe even $70 per barrel towards 78.6% before market really moves to the downside. But still, even if you're wave 4 here, you need 3 subwaves. Okay, so as long as we are trading above this trend line here, I think that this ending diagonal still can be valid. Maybe not the best shape, the best example of an ending diagonal, but even with the bullish count, I want to show you that there is needed weakness for this ABC drop to complete wave 4. Okay, so I think that more weakness can be coming. Looking at the 4-hour chart, we are currently testing this nice trend line support. So maybe we get a bounce for wave B. Ideally would be to see $60 per barrel, and then we see a drop for wave D towards lower prices. Okay, so crude oil, when I look at it at the moment based on maybe higher degree time frame charts where I'm bearish, I also see now bearish, at least for temporary weakness, that can cause lower prices. So when I have this in mind, I'm wondering what will happen with the S&P 500. Well, I have interesting chart here. Back in 2019, in April, we have seen crude oil topping on April 22nd, around there. Okay, and you can see that prior to that, there was a positive correlation with the S&P 500. But then when crude oil continued lower and make a free wave drop, we have seen the S&P 500 that was trying to catch the crude oil to the downside. So it looks like the whole market moved into the risk off mode, but crude oil was the first one that actually was showing us in which direction we are going. Okay, and then again, this happened very similarly in July. In July 11th, crude oil topped here, and then we have seen the S&P 500 topping at the end of July.
Yeah, so crude is leading.
Exactly, and the S&P 500 always caught the crude oil moves. So now we have, then also here in September, they actually both made a top in a very similar time, but crude oil made a much more volatile spike before it moved to the downside. So it was aggressive sell-off, and probably this aggressive sell-off on crude oil also caused a drop later on the S&P 500, but not into the same degree. But now we have a very similar situation. Crude oil made a top before the S&P 500. And if we consider what has happened in each of these cycles for 2019, I would really not be surprised to see S&P 500 also turning to the downside when we see crude oil continuation lower, because as I said, probably we are going to see at least 3 wave drop. Okay, so based with all of this approach, I would really not be I would not trust the S&P 500 at these levels. However, I'm bullish on the longer term charts. I'm expecting more upside, but I think that in each trend, no matter what degree of the trend are you following, there will be pullbacks. And maybe this pullback will occur now when we already see crude oil moving lower.
We have plenty of people asking about the metals. You know, I cover them every day, and I was especially giving you know, I was giving a lot of the focus on platinum, and you know, different ratios.
I will look at gold in a second.
Yeah, gold platinum ratio, palladium platinum ratio. Palladium is quite interesting as well, actually.
Okay, so gold. On gold, what I see is on a monthly chart is that market moved into this 61.8% retracement area. And actually it made a 3 waves up so far against the previous 5 waves of decline. So I think it can be a perfect timing actually for market to at least to slow down here, if not to reverse to the downside.
Yeah, but Greg, look at the daily chart, for example. It looks to me like gold is building another bullish pennant.
Yes.
So
yes.
Yeah.
Let me go step by step. Okay.
Okay.
So, and then we have also here on a weekly chart where I think that we may see a reversal is because we stopped at this very interesting fib level. Okay. So if I identified fib level for fifth wave, for wave C, whatever, and I see a reversal from that fib zone, then I probably should be even more paying even more attention to potential reversal, because actually market proved to me that fib levels held. Okay, and then we have another thing. This is one interpretation, one wave count, whereas in A, triangle for a wave B, and then a wave C into fib zone. There can also be labeling wave count, where I would say that wave B finished here, and that this was actually a 5-wave movement within wave C. So after these 5 waves, you would be expecting a reversal. Another thing is that looking at the weekly, I can see a very strong doji formation at the highs, right after these fib levels were tested, right after this 5-wave potential move within wave C. Okay, so if I try to focus on minimum expectations, I would expect at least 3 waves of a setback back towards 1450 levels. I would not say that we are going to make a 5 waves down, because even if that would be a 5-wave down sometime in the future, you will still have a 3 waves drop minimum, right? So I'm thinking that more downside will be coming. Also, I have here the monthly chart, which I think it's a very interesting. Here we have seen in 2014, there was a rise and bullish candle on December. There was a bullish candle in January. What happened then in February? Market reversed. Then we have here the same thing in 2017. December was bullish, January bullish, and in February market reversed. Then we had here in 2018, December bullish, January bullish, February a reversal candle. The market did not make any big progression to the downside, but it was still 3-month sell-off. Then again, in 2019 was bullish, 2020 January was bullish. So it goes perfectly in line with the Elliott wave theory and with this candlesticks approach based on a monthly basis, that market would actually face a reversal. Not to mention that fib levels that are, I think, very, very important on a higher degree time frame scale. So I'm really thinking that if not something dramatically will happen here, that at least we are going to sideways price action or even bearish price action that will take us much, much lower.
Can I ask you what the 5 is up there, Grega, on top?
This 5 is part of a wave C.
Oh, okay. You just have it labeled above it. Okay. It doesn't mean anything where you place the 5, like 1694.
No.
Do you have a wave count for palladium? You've seen how parabolic it's gone, right? Today is the 17th consecutive up day, by the way.
Yes, yes, but my concern would be if, I mean, gold, if palladium is moving extremely to the upside, but gold is not falling to the same degree, and sooner or later, I think that palladium will move lower and face resistance and make a larger degree corrections, because that would be normal after such a strong move.
Oh yeah, absolutely. It's at the last phase. Yeah.
Then. So
I guess, Greg, my question, Steve, can I ask him just one thing? It's selfish, it's for my own trading. I see 2 drives in the gold, Greg, the last spike you're showing. Is there anything that could develop to give us one more new high in gold before the correction ensues?
You mean like we are going to retest 1630, 1650 and then
take it out for a 3rd drive. That's drive 1, and then the last high was drive 2, and maybe we get a 3.
Yes, so in such case, if you look at this 4-hour chart, then I would probably, what I would do if this unexpected move happens from my point of view, I would probably say that wave 4 has finished here, and that we see a move to the upside and then a drop.
Okay.
But basically, that would not change my overall view. I'd still
it would just give us a better entry for shorts if that happened.
Yes, it depends on the approach, because I'm looking, before I may look for shorts, I want to see market to reverse to the downside, and then I go with the market.
Thank you, buddy.
So looking at the 1-hour chart, actually I have 2 wave counts here. The first wave count shows 5-wave drop from the highs with 1, 2, 3, 4, 5. And then you have this ABC pullback now in progress. There was a nice fib zone here. So looks like that this was really a 5th wave and that we are now correcting. Now, if that's an ABC, then I would be looking for a move back to 1563 up to 1570, maybe even higher before market continues to the downside. Then I have here another wave count, which actually suggests that this first 5-wave move already bottomed here on January 09, and that we are now in irregular formation. 3 waves up for a wave A, then a drop to a new low for a wave B, and now you have a wave C, which again could face resistance in the very similar zone around 1560 to 1570. So based on both interpretations, even if we would be headed back to the upside sometime in the future, I still think that this current whole price action could take us below 1530. Okay, and ideally even 1500. And then let's see what happens down there. But I really think that this is, with all pieces of the puzzles, I really think that I should be aware just of more weakness while we are below latest January highs. At the same time, maybe we could again try to shift and look maybe what will happen with Aussie dollar. I know that Aussie and gold lost some correlations in 2019, but maybe this can come back into play. I was looking at intraday charts, and actually since gold found this low here in January 09, gold and Aussie are now trading in a very similar swings. So if gold is really going to find resistance here, which at least for my taste is it has a very clear wave counts, then obviously Aussie may also face the limited upside. So looking at Aussie, here I have this chart that I'm looking at. I will just focus on this shorter term patterns. I see 3 waves up from the lows of 2019. This was wave A, this was wave B, this was expanding diagonal for wave C. I really like the idea that at the end of 2019, there was aggressive, very strong move to the upside. Market closed very bullish at the year end. So obviously this was seen in traders' minds like a very nice bullish unfolding price action, right? But what I like about the bearish interpretation, that the bulls were completely erased with a very strong, if not even stronger price action to the downside compared to the previous bullish rise. So for me, the bulls that were here are actually worth nothing at the moment. The bears are much stronger. So in my opinion, we could see much more weakness after this current bounce that I labeled as a temporary corrective recovery. Also, if I look from clear technical perspective and ignore these head and shoulder, these wave counts, and just focus on the head and shoulders pattern, we can see a very nice potential neckline here. You have shoulder left, you have head, and you have right shoulder. So you have also here now current shoulder moving into this very nice horizontal resistance. So putting all into the same context with gold, with the wave counts, with this head and shoulders pattern, of course, head and shoulders is confirmed as a completed and would cause more weakness once the neckline is broken. With the Elliott wave theory, Elliott wave theory can give you some kind of an edge to be early on the trade and maybe look for better entries based on a risk rewards perspective in particular. Okay, do we have any questions?
Plenty, actually.
Then we are
Palladium, platinum.
Let me just check if I hear. Just
yields.
Yields, yes. I can take a look at yields just a second. Yields. Actually, yields didn't change much. I can talk about Bitcoin.
Yeah.
Firstly, okay, yields. I mean, yields.
Yeah, one more low.
Yes, I'm still seeing this as a wave 4. It's a very nice structure, and so far looks like an overlapping recovery.
Yeah, we were mentioning that yesterday. The vast majority of actually all of the US bonds have more or less the same corrective rebound, right?
Yes. So, I mean, and I really like this scenario for potential risk off, because if this fifth wave will really kick in, I think that maybe crude oil and will make sense to watch out, maybe in line with the S&P 500 to hit resistance, as I mentioned earlier.
Yeah. Thank you, Greg.
And to watch out then obviously for potential failure break higher here on dollar yen.
Greg, what is your longer term view on the bonds? I mean, I see your weekly count here just for this move lower, but what is your overall view of the bond market? I mean, what would you expect following that?
After 5, could that be the end of all of this, Greg, and we enter a new bear market?
I would be expecting a major correction. Okay, a major correction in 3 waves, and then maybe we move even higher. But if we really are going to see a 5th wave here and we turn to the downside, I just think that we will remain trapped here in this range from 2012 to these 2018 lows for a while. Okay, so I'm looking for
a range.
Wave. Yeah, so I think that after this 5th wave is done, we will stay consolidating.
Okay.
Eventually, we may see some kind of a recovery then later, but I'm not really confident. Just too much in front of these wave counts, actually. You said commodities.
Yeah, Steve likes the exotic metals. Do you have a cobalt? Sure. Hey, Greg, what's your view on kryptonite?
On cryptos?
Kryptonite.
No, kryptonite.
Kryptonite?
Make sure it's in a lead case.
Yeah.
Oh, Steve liked that one.
Okay. So we have here
pretty sustainable move in palladium, right?
Yes, but look at the wave structure. Okay.
You're now looking at platinum. Yeah, but if you're looking at the long-term picture of platinum, I think that, one thing that somebody should notice is the fact that I've been showing that for quite some time. We have since 2011 a descending trend line resistance that was containing, the price action show all the bearish trends, and we have now actually broken above it. So I consider that to be quite an important development.
Yes, I would actually. I should agree. Okay, it's definitely a very important breakout based on longer term charts. But still, I mean, despite this breakout, we have an overlapping price action. So even if from an Elliott wave perspective, I would have issues to count this in impulsive fashion. Maybe I could force the wave counting a little bit and say that this is a leading diagonal. Okay, so if I just
wave 1 as a leading diagonal, yeah.
Yes, and that would be some kind of a leading diagonal. But again, you would face a 5th wave in a leading diagonal would be moving right now into resistance, and you would be expecting a 3-wave setback, right? So when I try to combine this with gold, I really think that maybe this current move up was maybe delayed to what gold has done in 2019. I'm not sure if there's a very good tight correlation between these two. It would be interesting to see maybe what
there is something that you're going to like very much from an Elliott wave perspective. I was showing that yesterday because it was breaking out. Go ahead and have a look at the gold platinum ratio. Just type XAU USD, yeah, and then the divide, yeah. Okay, with XPT USD, and look at the triangle break that we got yesterday. You see this?
Yes.
So I think there's more downside here.
You mean this?
Yes. Perhaps a wave B or a wave 2. Who knows? Yeah.
Yes.
I was showing that yesterday because yesterday.
So you want to highlight that gold will actually is at resistance, and that if anyone wants to look at anything to invest, rather look away from gold.
Or actually just trade the gold platinum ratio. Why not? You can.
Maybe there is room, definitely.
Yeah. To 1.4. Actually, I was saying yesterday that we can easily move to 1.4.
Yes. But on the other hand, if this is wave C.
If this is wave C, it might be wave 2 that we just broke through. We'll see we'll get to see the momentum of this move lower. Is it going to be wave 3? Is it going to be,
Well, let's see what happens down there.
Exactly. Yeah. It's going to be quite important as a breakout.
Yes, for sure. Okay. What we have?
Here is an unsustainable move.
Yes. Don't talk about that. I mean, but you can just, if you're not trading this one, you can just observe it now for a while, maybe, and wait on some kind of a pullback, because it's really
parabolic. Yeah, it's vertical.
And, I don't believe that we will go and continue higher with the same manner like we're seeing right now. So.
And what I was saying yesterday, Greg, and I don't know if you agree, is that usually when an instrument goes completely vertical, it is impossible to just stabilize at the highs and correct over time. Do you remember ever seeing parabolic moves that actually end up in a horizontal consolidation? I mean, this can happen if you have like a strong bullish trend, but when it goes completely vertical, what usually follows is a very sharp correction lower. Usually.
Yeah, I mean, I'm just looking at this. Unless you are looking at dollar to Turkish lira.
But even if you look at this, just look how much of a percentage dip we got from the end of that parabolic move to the low. I mean, it looks like being quite little when you zoom out in the chart so much, but that move from the high up there
from
to the lows.
5, yes.
Yeah, I mean, it was a very decent move, right?
Yes, it's still, that's what, 30%?
Yeah, I mean, come on, it's not a negligible move, right?
Yeah, of course. Absolutely, I agree, yes. So what you want to try to say here, that at least a pullback?
I think that we're going to see soon a pullback, and it's going to be very sharp. That's what I think. I can easily believe that we might find ourselves, once this begins, back to $2,000 within 4 or 5 trading days, easily.
Yeah. Do we have any more markets? Any questions?
Yeah, question about Bitcoin. I think I actually was showing that last week. I think both Bitcoin and Ethereum have broken out to the upside. I don't know what's your point of view.
Firstly, I will look at here on this Bitcoin. I have been warning at the start of December that it could be month of a reversal. It happened in 2017, December highs, 2018, December lows. So again, 2019, December lows. We have seen a very nice bounce, almost more than 25% move here so far. And it looks like that we are now trying to break this downward channel. But what is really important when you are looking and trading cryptos is that this is not same market personality compared to the FX or stocks. If you have a channel that you're watching very carefully on stocks and you see a nice decisive breakthrough, maybe there will be enough to see just one daily close out of that channel. But here on cryptocurrencies, I really think that more time is needed before we can actually confirm that the breakout is really here and that flows are really changing. Because just as you know, in cryptocurrencies, you can see one day 20-15% rise, but then in the next day, you can already be below that 15% rise.
Indeed.
Right?
That's a pearl.
That's why I think it's very important to cryptos not be focused on just one daily candlesticks and say that breakout is here, just rather wait another 2-3 days. And if we really just consolidate at the highs, or maybe even better, if we see progression higher, that's when a real breakout could be finally confirmed on cryptos. On FX, markets and stocks is very different, especially on the FX, because the FX, as you know, has a very low volatility for the last few months, if not years. And
years, actually, yeah.
So
yes,
is it because
actually,
of the amount of money in crypto that is much smaller? What do you think the rationale is for lack of follow through on moves in crypto that you have to wait an extraordinary amount of time for confirmation?
yes, I mean, if you definitely have to be with cryptos, you have to be much more patient. But the problems with cryptos is that traders are not so patient because they want to make quick money because the market moves very fast, right?
The reflexive nature of it.
I
Yeah,
think,
so-
Dale, there
Okay.
might be another factor here.
What do you think?
We know that a small percentage of people, of owners of these cryptos have like
I
a,
see.
you know,
They
huge
control
amount.
it. Yeah.
Yeah, so it's easy to conduct pump and dump operations, right?
Raids.
We-
Yeah, their
Yeah,
raids are more effective. Yeah.
the last time we saw that very vividly was at the end of October. If you remember, we got like 2 consecutive up days when Bitcoin went from like 7.5 thousand to above 10,000, and everybody was like, "Oh, it's breaking out. This is it. You know, we're on our way now to 20,000." And after those 2 days, we got death by 1,000 cuts. I mean, it started bleeding every single day, and we completely retraced that 2-day operation, and we found ourselves quite a lot lower following that. So who knows?
Who's
I mean,
we?
I don't
Greg,
know. Yeah.
Who's we? I always.
Greg is a big, Greg is a big, yeah, he's a big whale of cryptocurrencies.
Let me be completely honest with you, Steve. And you should say, why me and why now, Dale? So, Greg, a great review again, buddy.
Thank you, man.
Thank you so much.
Thank you.
Gregor, what do
Steve?
you think? We have people asking about
Interview
oh,
time, Steve.
we have an interview. Oh, okay.
Yes.
Okay, then in one word, what do you think about euro and pound? Higher or lower or horizontal?
Sure, first, just give me a second.
Yeah.
I will be very quick. Firstly, on cable, I'm expecting more weakness, but after another rise towards this 1.330 level, at the same time, because I'm looking for a wave C, at the same time, I would be looking for euro pound to come back to the downside, test these lows from
And then higher.
start of January, and then turn to the upside. I'm looking for a flat.
Okay.
Okay.
Thanks, mate.
Thank you.
Thank you, buddy.
Bye-bye.
Good
Who
hunting,
do we have
Greg.
today?
Yeah.
We have James Anderson. He's with SD Bullion. So maybe you could even ask him about some of your, kind of off-track metals that you watch, like palladium,
Oh, you can do that.
rhodium, and kryptonite.
You can ask.
Okay, I will. I'll ask in your name. So James,
Perfect.
James, welcome to Face. Looking forward to talking to you. There you are. And I'm going to unmute you. It's not letting me unmute.
Wait a little bit. It, sometimes needs a little bit to connect.
Okay. Hi, James.
No. He doesn't still yet have an active microphone. You'll see it on the panel when he does.
The more button is covering up the mic, so that's why I can't see it.
No. It's not there.
Oh,
Now it is.
Unmute.
You see?
Okay.
Yeah.
Hi, James.
Hey guys, how you doing?
Very nice to meet you, James.
Yeah, thanks for having me on.
I appreciate you being here. If you want to share your screen, there's a drop-down menu with a green box that says share.
Okay. Yeah, I didn't really prepare any slides or anything. I figured we'd just have a conversation.
Okay. Well, then I'll share.
Cool.
So I will share. Okay, James. All right. So we're looking at your website. I'd like to start with what was your introduction and what were you doing before you became a hard money guy and got into the precious metal business?
Sure. Let's see, I'll go back to, just childhood in general, like going to my grandparents' house and finding junk silver in their closet and that feeling of like, well, why do they save this coinage and not use this coinage, et cetera? So, it's that first thing that happens when you're really young and you start to learn about currency and the differences between the metal that's in the currency. Then just going to college and going.
And why would they hide it? That you had to take all day and you weren't at the Thanksgiving dinner table. You're sneaking around your grandparents' house looking for her treasure.
Yeah, exactly.
All right.
Yeah, no doubt. I mean, it's one of those weird things as your childhood you run into and you think, well, it's just like a seed in your brain. And then later, as you get older, you start to learn, oh, okay, well, that makes sense why they did that. So in college, I went to Loyola New Orleans, got a degree in finance, bachelor degree in finance, and a bunch of my professors were of the Austrian economic bend. So,
okay.
Though I don't subscribe completely to say that that's the perfect theory, they gave me at least a secondary idea of, or basically secondary reasoning to why the world is the way it is and economic theory. So that was nice to get exposure to something else other than Keynesian economics. And that kind of planted some more seeds for me. And then, after college, I traveled a bit. I lived in Central America for about a year. And then I went to Southern Cone District and lived in Buenos Aires for close to a year too. So
wow,
that was only a year or so, 2 years after they had their devaluation of their peso. It was pegged. Most listeners out there may know that in the 1990s, Argentina had a 1-to-1 pegging, which wasn't going to work out. The trading, they just kept building a bigger and bigger deficit. And it's not as if they have the world reserve currency like we do. They essentially, every 20 years or so, they blow out and default on their debt. And that's exactly what occurred there. And so,
so you saw what it was like to have fiat fail. Were you there on business or you just wanted to do some exploring?
So I wanted to learn Spanish and just see stuff, and I had like an internship, but it wasn't super serious, and it was totally different dialect in Central America. So the Spanish was, it was difficult. You get down there and you're like, oh, I have to relearn a lot of this conjugation and accents and such. So, but as far as my exposure to the people, I think that was the most important part, was kind of getting a feel for what the society looks like when they feel like the government and the people surrounding the banking system have totally screwed them, and the corrosion of trust, the corrosion of institutions, and how people get along. And since that time, obviously, Argentina kind of went through a placid phase, and then it's gotten worse in the last decade or two, and they're still having trouble with their currency. So I think it's 1 to 60 now, dollar versus peso. So obviously, that's a huge blowout since I was there.
Was there massive social unrest during that default?
Yes, there were times when I'd be walking to my internship and I would see farmers, the huge amounts of protests. They come in, the campesinos would come in from outside of Buenos Aires, and they would just come in droves. 10, 20, 30,000 people would be walking down the street. And if you saw them coming, you just find the fastest subway quick, because they're going to basically clog up everything, and it's going to take you a long time to get where you're going. So,
James, I have this haunting image, and I remember that time period in Argentina where it showed a video, showed a man driving a beautiful Mercedes, getting out of his car and running into the field to slaughter a cow for food.
I think there's been clips like that in Venezuela of late. People chasing animals just to try and kill it and have something to eat, and talking about groups of people trying to do that. So, I mean, it's in Latin America, and this has happened since the 1980s, and before that, but 1980s when the dollar was very strong and we had the Plaza Accord. I mean, it was blowing out currencies in all these countries. Brazil had a hyperinflation. Argentina did then. Many countries did. They had issues with it because the dollar was just so damn strong. That's the same case that's kind of happening right now. I mean, the dollar has been very buoyant in the last 5-6 years. And it's amazing how far your dollar goes in these countries. And I still, when I look at it and think about it, it still recoils the mind. And it always has, ever since I've traveled outside the United States. It's just, we are in we are very lucky and fortunate to have currency that is tradable around the world. That has so much plumbing underneath it and so much credibility compared to some of the currencies that don't have that.
Do you think that's changing? I would say, I've been aware of the precious metal business for a long time, and I've always believed in it. I remember buying physical at $200, $300, $400 in that range, and people are calling it an archaic relic. It's only good for a paperweight back around 1999, 2000. But, I look at both sides of the market. A lot of people in the business have this mantra: don't wait to buy gold and wait. Is there ever a time that it's not a good time to buy gold? Like certainly. Perhaps in here?
Well, no, I think there are certain times where gold is, you just have to remember the powers that be, right? The governments and the central banks don't want to be tied down by gold, but they know that the system they've made in the aggregate, totally, all these central banks combined, that the system they made is coming undone, it's not working, and that there's a lot of disgruntled countries underneath the power structure. And so I think a lot of them are starting to move toward less dollar reserves and more gold reserves. And that's, if you just look at gold, central bank gold buying, it's at record amounts. The last time we were at these levels was during the London gold pool, when they rigged the price of gold for a decade plus at $35 an ounce. And the US lost almost twice as many reserves as we claim to have now. We claim to have just over 8,000 tons, and back then, after World War II, we had over 20,000 tons. And a huge swath of that gold was the gold that we confiscated in 1933 and 1934. And all that gold essentially started flying out the door, going over to France and other countries who were calling our bluff, watching us have wars in Vietnam under unjust reasons and such. And so they were coming and taking gold instead of dollars. And we had over 10,000 tons of gold leave our shores. And that basically was what set up the situation where we live today. 70 years later, where I can travel around and still use fiat Federal Reserve notes and get away with, pretty incredible purchasing power based on the fact that we had this precedent set up after World War II, and we had all this gold, and our entire country was untouched. We weren't bombed out like Europe, et cetera. So we just got this very lucky situation. I look out, like you're saying, and I think, if you look out another 20, 30 years, things are going to change for sure. I think in the monetary system, it's not going to be a situation. Technology is going to probably force this on us, but I just don't believe it's going to be a situation where the US dollar is running 60% of the reserves in the world. I think it'll probably shrink as time goes on. You just kind of look in the past, you look at where the British pound sterling was.
And that wasn't exactly a peaceful handover from one reserve currency to another. No. We had a depression and a world war, and that was Anglo to Anglo. Do you see the power shift, like a lot of people moving towards Asia? And do you believe that the financial system that they're developing away from SWIFT, which is what we use for leverage to control countries and people, will eventually be serious competition for us?
I think so. I think what we're seeing today is just kind of a new technologically advanced Cold War, where we're probably going to have spheres of influence in the next monetary system. So you'll have the Asian bloc, where you have Russia and Mongolia and China all trading amongst each other more so than perhaps other countries, and they'll be a little bit closer tied. I don't expect that we're going to see a World War III. I think most wars and stuff like that is happening underneath most people's privy. I think it's happening on, in terms of hacking and all the stuff that's going on through currency and various clandestine means. We may have some Cold War type situations like that using new technologies, but I don't believe we're ever going to get the hot war, World War III. I think most people in power.
That's a relief.
Yeah, I think most people in these countries understand that's essentially, that's a suicide. So
I know a lot of people also say that one of the reasons for that is that when you see the fracturing in different nations, that most nations will be too busy just managing their own population,
right?
And they won't really have time for military adventures outside the country.
Exactly.
Let me ask you this. You could tell me or not. Do you live in the U.S.?
I do not. I've since last year moved offshore. I live in Central America in Panama.
Oh, okay. All right. And is that because you would rather watch what unfolds in America on TV than be in the middle of it?
It's a combination. It's mainly for federal tax income purposes. I save it a lot in terms of federal tax by living offshore, but it's also a combination of quality of life. You know, what I'm able to afford living here versus in the United States. I think, you know,
try Southern California.
Yeah, I lived there I lived there from 2005 to about 2014. And
so what are your housing costs in Panama?
In Panama, if you're looking around, you can find yourself like a nice 3-bed, 2-bathroom house to rent for like $900.
Okay.
And I don't live in the full city. I don't live in Panama City. I live in northern Panama and like the mountains. So
so you don't have to deal with the excessive heat.
No. I chose not to live in heat. I wanted to live somewhere warm but it's like springtime weather all year round, and it's only like an hour from the Pacific Ocean and world-class sport fishing. I mean, it's like this place. I wouldn't have known about this place. I didn't even know about this place. I lived in Costa Rica in 2002, 2003, and the Costa Ricans, they always tell you that Panama's no good. But the truth is, northern Panama is really nice, and it's kind of a secret. I don't want a lot of people to know that, but luckily, not many know. But it's a nice area.
Get your guest room ready, buddy. All right. So anyway, I'm looking at some monthly charts in gold.
Yep.
And everyone's looking at the high that we had in 2011 at 1900. And isn't it possible that this rally that we've had, and I know it would take, the only thing that would really turn gold negative would be to negate the breakout at 1360. But isn't it possible that we could still have, now that everyone is, talking about inflation surging, the grains are basing, you can't eat gold. Isn't there a possibility that you see this? And that this is 61.8 back of the whole decline, and that we could have another pretty good decline in gold?
Yeah, we could definitely have a consolidation in the next month to 2 to 3. This is kind of, I feel like we are in that phase of the wall of worry where we go 2 steps forward, 1 step back, and that's fine. What you don't want is some sloppy move to the upside. You
mean like this?
Like palladium? Are you going to show?
How about this?
Yeah, like the repo markets are helping out. Sure.
Well, look, the S&Ps.
I know it's that's another.
Are you
subject.
Surprised that financial assets are still doing so well with the with the bull move in gold? Because normally people would think that gold would thrive in times of risk off and crisis, and actually it's been doing very well. While they used to say Tina, there is no alternative to stocks, but metals in the last year or so have proved there's an alternative to stocks. So
for sure.
Do you think that, which one's wrong, gold, S&Ps, or both of them?
Ultimately, I think when you look at gold in terms of valuation versus stocks, there's data that goes back 100, 200 years, and we're stretched where we currently are. And if you look at, just say, for instance, the S&P 500 divided by gold, or Dow Jones Industrial Average divided by gold on a long-term basis, I mean, we basically look like we were going in a dead cat bounce from the 2000 high right now. And a lot of this is engineered by financial engineering. No one would have ever believed that they'd have negative interest rates. No one ever would have believed this QE 1, 2, 3, not QE 4 nonsense that we're looking at. No one would ever have believed the size and scope of the repo market intervention that's gone on by the Federal Reserve. We still don't know exactly why that's occurring. It's probably JP Morgan stepped away. And why did they step away? It's interesting. The timing of it was very interesting and still kind of conspicuous, is the sense that September 16th, JP Morgan's precious metals desk got charged with RICO, which is essentially RICO Act, which is essentially racketeering. It's something that was used against the mafia in the 1970s.
Yeah.
The U.S. Department
I remember when they arrested me for RICO.
The U.S. Department of Justice went after them on September 16th, and then the next day.
You know what they did, James? They repossessed my Ford Pinto.
Yeah,
they took it away from me, man. And they got $300 for it. Anyway, so here I'm looking at J.P. Morgan. So you're saying this happened on September 13th?
September 16th was when the RICO U.S. Department of Justice lawsuit hit them, and it was basically
right here.
It's basically alleging that, hey, you guys have been spoofing and front running your clients in precious metals for around 10 years, and we're going to criminally charge the head of your precious metals desk and about 6 of their subordinates, and that's still going on.
So this was a great RICO break to buy. Yeah, this was a charge, and it had a little pullback, and look what it's done since it was charged. Yeah. So it's actually a bullish event to be a federal criminal. Yeah. You might have to go to jail, but you're going to see appreciation of your company.
Yes, exactly.
Could Rod Serling have written a script like this?
Well, no one would have believed it. That's always the hard part about the reality, is that it's always more complex and interesting than any fiction any human being could ever surmise. So it's very, very detailed, and it's something that it would be very hard to just make up out of thin air.
Okay, so do you have any zones in the gold that
so
if we had a pullback that you would, and I do want to talk a little bit about your philosophy of holding physical.
Sure.
And I'm curious, you're in Panama. Mm-hmm. I know a lot of people around the world can just go out and, take a coffee can and fill it up and bury it. Mm-hmm. So they have access to it. I know you represent, I'm going to help you guys with a little commercial here. San Diego is SD stands for what? Not San Diego.
No, it stands for the two founding members of the company. They were both pharmacists, but it's not as interesting to call the company by, SD stands for, originally it was a blog called Silver Doctors. It wasn't going to be called.
I've seen the handle on Twitter. Okay.
Right. So Silver Pharmacist wasn't going to work. And then a year later, they had so much following, they felt like, we should try our hand in having a bullion dealership. And that's essentially what this is the bullion dealership portion of their companies.
Okay. So how do you advise your clients as far as when they purchase physical? Do you recommend that they have a storage facility outside of the U.S. or take possession of it and put it into a bank lockbox?
Sure.
Go ahead.
So first and foremost, just understanding the mathematics of the situation. And if you look back the last 50 years, the data regarding living under a full fiat monetary system, obviously in 68, the London gold pool failed. And from 68 to 1980, gold went from 35 to 850. And, 1971, the US dollar went off of gold. So essentially we have about 50 years of data, living under this full fiat monetary system. And when you do there are studies that have been done. Jeffrey Christian of CPM Group he has a wonderful study where he had 500 different portfolios that he measured S&P 500 versus various mixes of the 4 major precious metals and U.S. bonds and treasuries, et cetera. So he had those 3 to work with, and he was trying to find the best risk-reward ratio based on the last 50 years or so of data. And what he came up with was surprising. It was essentially 25% gold was the best risk-reward you could have had in the last 50 years. And there was other mixes of gold, silver, platinum, et cetera. But the one that worked the best the last 50 years was just flat out gold, 25%. And that's a risk reward, meaning that it was the smoothest and the best performing over that entire duration. There are times, obviously, when having one or the other metal is better, but gold the last 50 years has been the anchor. And I would suggest anyone who, when they look at the precious metals complex, if you're going to buy bullion, this is basically going to be the bedrock of your portfolio. And having a 10% allocation, I think probably should have a little bit more than 10%. I think given the valuations of paper currencies, given the evaluation of stocks, especially in the U.S. and of U.S. bonds, et cetera. I mean, they're all at extreme highs. If you look at a 100-year chart of the Goldman Sachs Commodity Index versus U.S. stocks or other paper assets, we're at like 100-year lows right now. And generally in a commodity bull likely to come this next decade or 2030s, gold will lead that commodity bull. And I believe that's what we're starting to see. And we're going to start breaking out. And I think ultimately the U.S., they have to devalue the currency because they promise more than they can deliver. And so it's kind of a question of, all right, U.S. government, how are you going to default? Are you going to default by debasing the currency further? Are you going to default by changing the rules? I think they're going to lean more on debasing the currency further. They will probably change the rules too.
Well, so they've had lots of practice doing that. so it's nothing that no new tricks would have to be learned. Do you think crypto is a competition for precious metals? What's your view on crypto?
I don't. I think cryptocurrencies in general, I mean, it's a good speculation. I bought, I think, Bitcoin in 2014 for a little while. I owned some. It's a nice speculation, but I look at those markets and I don't see them as being long-term places where you'd want to store value. I think Bitcoin, I was listening to your guest before. I mean, it's okay to trade and speculate in, but to think about its actual value in the long term, I think it's going to not be as high in the future. I think there'll be other technologies that come along because essentially what are we talking about? We're talking about something that mankind made, and mankind can make another better mousetrap later. I mean, it's just pulling it out of the ether. It's just digital stuff, right? So, I mean, what value is that? I guess the value is in, the amount of people in the network. But I mean, have you listened to what some of those people say and how they talk and what they think? Like they literally think, some of them think that they're going to all of a sudden become the actual money that's used in the world. I mean, have you ever used Bitcoin to try and buy and sell with? I mean, it's
I've talked about that. You walk into a grocery store and by the time you're in the checkout line, the fluctuation of Bitcoin, you either go, oh, wow, I really got good deals here. Or you go, wow, that's all of my Bitcoin. So that's true.
Central banks, they're not buying Bitcoin as a reserve. I mean, central banks buy gold bullion in case their currency goes bad. They have something to lean back on and start again, right? I mean, gold bullion is not going anywhere. That's money number one. And I think silver is, that's the one that has alpha.
Okay, how about the war on cash, James?
That's all.
You go into the bank, and if you want to withdraw, say 10K or 8K, it's almost like they ask you why.
Right.
And do you think that bail-ins that happen in Cyprus and in other cases in different countries that they weren't bail-ins, they took haircuts on, like in Poland, on their retirement accounts? Do you think that they are a possibility if there's anything systemic, because the taxpayer would not have the appetite for another bailout of banks like they did in 2008?
Yeah, the bail-in laws have been there since the end of 2014. If you just simply Google bail-in SD bullion, you'll find an article I've written on that. It's basically it's supranational it's supranational laws. I mean, it's got the G20 signed up. So any country in the G20, which includes the United States and 19 other major economies, including EU, China, et cetera. And it's run, the law was pushed on by the Bank of International Settlements it's basically a regulatory body called the Financial Stability Board. And the FSB got everyone on the G20 to sign at the end of 2014 on this. So what it simply states is that of all these major globally systematically important banks, if any of them go under, you are now signed on to bail them in, and we're not going to let the public bail them out. And what that essentially means is that in a bail-in, if you look at the law and read it, it essentially says that derivative bettors are first in line creditors. So imagine that the derivatives sitting on JP Morgan's desk win versus Deutsche Bank, which is failing and going bankrupt. Well, JP Morgan can then show up at Deutsche Bank's doorstep and be first in line creditor to take the assets. And then next would be anyone else who had secured investments with Deutsche Bank, for instance, like secured bonds, et cetera. But there's anyone who has
depositors are last, right?
Right. Depositors and stockholders are totally unsecured. And so, you'd have to go and work it out. If you had more than the insurance that the FDIC covers, good luck. It's going to probably be 5-10 years and you'll get some devalued, shares in whatever new creation that they come out with later. So
are you a proponent of only having like enough for your monthly expenses?
Yeah. The the hard part is if you run like a really large corporation or a company, right? But if you're just doing it in your household, yeah, you shouldn't have more than what the FDIC covers, which is, I believe, is 250,000. If you have a family, for instance, you could put it in your child's name and your wife's name too, and so that could help you spread it out a little more. But there are tactics to use to make sure that you can make sure that your cash is FDIC insured if it's sitting in banks, but you probably
How
have
about
to
90-day T-bills? That
Yeah,
was always
that's-
considered
yeah.
the safest paper. And
Yeah.
if they ever do, and you know, you have no principal risk. If rates
Yep.
go up, you just keep rolling it.
I agree. That's more complex than most people would do. But if you are financially savvy, you could totally go to the Treasury's website and buy them.
Right.
And just keep rolling them over. You'll probably make more interest than you would at any bank, and then it'd be safer than any of those banks. So I agree. I think that's obviously, if you're more sophisticated, that's something you should consider.
What a great interview. I'm very happy that we had a chance to talk in the current environment. Let me just check and see if there's any. So then what does a guy do with money in a trading account?
Well, I mean, I wouldn't trade on a short-term basis anything I'm not willing to lose completely. So bullion to me is something I'm not willing to lose completely. And that's why a good portion of your net worth should be in something that you're not going to lose, because it's physically something you own outright that you know in the future human beings are still going to value. And so that's the reason why I go bullion first. But if you're trading, and look, a lot of people who are bullish on precious metals, they have a core bullion position. Yeah, and then they trade around that position, and I think that's totally fine. If you're working, you know, obviously you got to have the right counterparties. You want to make sure you're not MF Global trading. You want to make sure that your counterparty is sound. That requires your own due diligence. I can't explain to you how to do that. That's a little bit long context.
Well, I just have a hint or a tip that you're better off having your account with a clearing member firm of a major exchange, because the exchange will back it up if you're a member.
Yeah.
They always have. If you're just, you know, say for example, a non-guaranteed IB, and that's a different story, but try and find a clearing firm of a major exchange. I think that's your best shot for, and hold your money in cash. You could use T-bills to trade. So that's my tip. And James, you know, I'm so glad I found you on Twitter. And guys, here's a great intelligence gathering source for the world that we may be facing here. I know that many of our team are the long-term bulls on gold. I know Greg is looking for some type of correction here, but James is a great source of information and he could help you. So thanks for being with me. You're, like it or not, James, you're my trading warrior brother, which means I have at least a 2-week stay in North Panama with you.
That sounds good, Dale.
Thanks
for having me on, man.
All right. Good hunting, everyone. That's James Henry Anderson, and you could follow him at we have his handle is James Henry and that's a wrap. We'll see everyone tomorrow. Don't just count your pips or coins or silver bars, count your blessings, and we'll see everyone tomorrow to wrap up the week with Boris Schlossberg. So adios, everyone. Good hunting, and thanks again, James.
Thank you, Dale.